So at the time of this recording, Meta stock is up over 12% after I said to expect this. Take a listen. Now, in terms of chart pattern, Meta stock is currently inside of a bull flag, which means if the stock could stay above 697, then I want you guys to look for a run to 749. From current price, that's an increase of over 7%. Now, in that same video, this is what I had to say about Qualcomm, ticker symbol QCOM. So as you guys can see, the stock is currently running into resistance at 163. If Qualcomm cannot get above 163, then I want you guys to look for a pullback to 154. And if that level breaks, then we're looking at a pullback to 148. So as you guys can see, my first price target was hit, and Qualcomm is now on its way to hitting my second price target at 148. Adding to that, my analysis on ARM Holdings, ticker symbol ARM, was 100% accurate. Take a listen. So current support for ARM is going to be at 161. If the stock falls beneath that level, then look for a 9% pullback to 149. And if that level breaks, then look for a further pullback to 143. Now, this morning's PCE report shows that inflation is rising. Take a listen.
Welcome back to Squawk Box. Rick Santella here live on CME HQ with the breaking news of the morning. We have jobless claims, ECI, employment cost index, and personal income and spending. Let's start with income. Remember, last month we took a ding, minus 0.4%. That was weakest going back to the fall of 21. Rebounding up 0.3, a tenth better than expected, and that would comp to, well, April, we're up 0.7. Now, let's look at personal spending, up 0.3, a tenth light, but a nice reversal before any revisions from the minus 0.1. Up 0.3 would comp to March when it was also up 0.7. Let's look at real spending accounting for inflation, up 0.1 exactly as expected. Now let's get to the meat of the matter. PCE, okay, this is month over month, up 0.3 as expected, but that's still a couple of tenths warmer in the rear view mirror, up 0.3. That's the second highest of the year, even though it's the third month, meaning Jan and Feb were both up 0.4. Those are the high readings. This would be in second place, up 0.3. So it does comp to the beginning of the year. So even though it's gone up, we've been higher, but it's reversing a bit of a trend. Now let's look at the year over year numbers. 1/10 hotter, both rear view mirror and windshield. That's 2.8. That is the highest reading of the year. It equals March of 24. To find a higher read, you're moving into, yes, the fall of 23 when it was 3%. And if we look at the core month over month on the PCE, up 0.3, exactly as expected. And that would be the warmest since February when we were up 0.5%. And finally, year over year core, in my opinion, the most important number, that's 2.8. Also, just like the other year over year number, it's a little warmer than expected. 2.8 would be the warmest since February when it was 2.9. Now let's look at the employment cost index. We're expecting a number. This is the second quarter number, up 0.8, comes in a tenth warmer, up 0.9. 0.9 would equal the second quarter of 24 to find a higher number here in the first quarter of 24 when it was 1%. Initial jobless claims, 218,000. Now that's a low number. We're expecting a number about 9,000 higher than that. 218,000 follows 217,000. These are awfully well-behaved numbers. And finally, continuing claims, another week above 1.9 million, 1,946,000, all congested. You know, I suspect that some upside pressure was there for some of the slightly hotter PCE numbers, but it also seems to be, to some extent, something to pay attention to, that the market did not really climb aggressively. We're up about a tenth, about 1 basis point in the 10-year at 434, but that's still down almost 3 basis points on the session. So even though these were a little warmer, once again, I always like to look at, there's both the trend direction of inflation, but there's also where we have been. And in every instance of higher than expected PCE, we have had higher numbers recently. Joe.
Now today, after markets close, Amazon, Apple, and Coinbase will be reporting their Q2 earnings. So let's go ahead and take a look at some key support and resistance levels to watch on those stocks. Let's begin with Apple, ticker symbol AAPL. So current support for Apple is at 205. If the stock falls below this level, then look for a 5% pullback to 196. And if that level breaks, then look for a 9% pullback to 188. Above current support, Apple has resistance at 217 and at 231. If the stock can get above 217, then I want you guys to look for a run to 231, which from current price would be an increase of over 10%. Next, let's take a look at Coinbase, ticker symbol COIN. So current support for Coinbase is at 374. If the stock falls below that level, then look for a 8% pullback to 347. And if that level breaks, then look for a 19% pullback to 307. So above current support, Coinbase has resistance at 411 and at 438. If the stock can get above 411, then I want you guys to look for a run to 438. And from current price, that would be a return of over 15%. The next stock is Amazon, ticker symbol AMZN. So current support for Amazon is at 232. If the stock falls below this level, then look for a pullback to 219. And if that level breaks, then look for a further pullback to 208. Now above current support, you have resistance at 242 and at 257. If Amazon can get above 242, then I want you guys to look for a run to my price target at 257. Alright guys, if you like this video, leave a thumbs up, and if you're currently watching and you're not yet subscribed, do consider subscribing to one of the best YouTube channels when it comes to technical analysis. As always, thanks for watching, and I'll see you guys in the next one.